So why look at an ETF to do this particular structure rather than to do this Vice investing rather than another mutual fund?
Sure. Well, AdvisorShares does nothing but actively managed ETFs, but we're big believers that the ETF structure, while similar and still a 1940 Act fund, it's a better structure. It's a better mousetrap, if you will. More tax efficient almost all the time. Usually you can get lower fees. A lot of benefits to investors, like the ability to use limit orders and stop loss orders. We simply like the ETF structure much better than a traditional mutual fund.
And obviously, Vice is your background, this kind of investing, going back to the ViceX mutual fund. It seems like ESG, to some extent, though, is the hot new thing, sort of socially conscious investing. So I'm curious where you see the appeal here for a Vice ETF right now.
Well, I wouldn't even call ESG a new thing. It's a very large, important part of investing for people. But we've always liked certain areas like alcohol and tobacco as being practically recession-proof, or at least recession-resistant. Everybody easily understands as well that alcohol and tobacco are areas that can perform through good markets and bad, good economies and bad. They can really have a low correlation to the overall market. And again, people easily understand that these areas can perform well through thick and thin.
Now, of course, you're talking about two quite mature markets, right, when you talk about alcohol and tobacco. Marijuana is a different thing entirely. Right now, the holdings are about half alcohol, about a third tobacco, and about a fifth marijuana, more or less. So how do you sort of work the interplay between these three areas where you do have an area that's so nascent versus these two more mature markets?
Well, we really like the way that these can work together and interact. We think in the future there's going to be a great deal of overlap between these industries. The tobacco and alcohol industries, while very mature, have a great record of navigating heavily regulated industries and working well with the federal government because of that. Cannabis, marijuana, it's not even an industry. It can be all sorts of things. For us, it's really mostly pharmaceutical and biotech because, very importantly, we're only investing in companies that are legal at a federal level in the United States. None of these Canadians, and certainly no OTC and pink sheets. There's an awful lot of those out there. But we think these industries work very well together. The cannabis, marijuana might be aggressive growth. The alcohol and tobacco can help offset that. But we're going to see overlap between these industries. Maybe mergers and acquisitions, at least joint ventures.
Well, speaking of that, I mean, we've seen the likes of Constellation Brands, for example, make investments in the marijuana industry. How quickly do you think that is going to ramp up? Until now, it's been relatively small.
It is relatively small, and most of that's because of federal regulation. So I'm not going to make any predictions about that. I will say that there's a large, social surge of people wanting legalization. And these pharmaceutical and biotech companies are making some great breakthroughs in medications, drugs that can be cannabinoid or cannabis-based. So we do think we'll see it in the future. The level of approvals or actual federal approval for recreational use, I make no predictions, but we want to be in a position to profit from this industry, if you want to call it that we think is just getting started, just in its infancy.
And Dan, one last quick question. Why choose to actively manage this ETF rather than either create an index or index it against something that exists?
That's a great question, and we're big believers in active management, but especially in these industries. Alcohol and tobacco even, I wouldn't want to be index-based and market cap-based because there's some mega caps in those industries that we like. There's also some small up-and-comers. especially though with anything cannabis related. I think there's going to be a lot of potential blow-ups, potential landmines in small up-and-coming companies because it's just in its infancy. We're going to be very selective and look for individual securities that we're going to add to this portfolio over time. Once again, mainly in big biotech and pharmaceutical.